This is John Feneck, and appreciate everyone getting on time into the room here today. And I will keep it brief because I want to open it up for questions sooner than later, because I think it's important with silver rallying for you guys to be able to ask some questions that are on your mind about silver, the sector in general, and hopefully about our special guest today, Silvercorp. I've got with me today Lon Shaver, who's VP at Silvercorp. We've known each other for about 2.5 years. And Lon joined the company in 2018. How's it going, Lon?
Good. Thanks, John. Good to join you today.
Good. So, I just want to start off, broadly, I guess, about silver, and then get more with a rifle approach into certain equities, yours being one. And I should start by saying that, I started my portfolio in January of 16, pretty timely. But Silvercorp was one of my original top 10 holdings. And I know when I worked at Sprott in 16 and 17, Rick Rule was a huge fan of your stock. Don Durrett, who's a friend of mine, who's written 14 books on silver and gold, has it in his top 5 picks in 2022. So it's not just me. There's a lot of smart people out there that are saying this really isn't the same old Silvercorp that they saw maybe a year or two ago. So we'll start with that, and then I'll just dive right into it. So silver, has been acting, very, very positively, obviously, over the last, number of weeks. We saw things kind of bottom out in our sector, everyone, probably around the last week of September. And silver has led this rally, which, you could argue late September, but really November 4th, in my view, started to break out. And when you see silver starting to lead anything in the metals complex, whether it's precious metals or industrial metals, because obviously it has both qualities, that's a very bullish sign to be buying our sector, whether it's silver directly or silver equities. Obviously, silver equities have a lot more leverage to the price of silver, which is what I like. And Silvercorp SVM is just one of those names that has that leverage. So when we look at the macro picture, silver is our 3rd largest holding overall. It's been that way, since spring of 2000. So, I put a position on in March, April of 2020, excuse me. And then I haven't, added to the position just yet, because I added so much at the time. So when people look at my top 20 holdings, sometimes they get head faked that, I'm buying silver hand over fist, and that's why it's my 3rd largest position. But really, I bought a lot from 2016's rally into the 2020, correction. So I've really spent more time doing research on silver equities like Silvercorp, because I know I'm going to get more money out of my investment, capital, by buying companies that have leverage to the price of whatever metal I'm trying to buy as well. So, with that, I'd say the macro picture looks pretty good, because we crossed 22 last 3 business days on a close, right? So when you do that, you see a close above major resistance being $22 an ounce. You're welcoming in the next resistance level, which in my view is around 25 bucks. And then for those of you that know my style, I don't talk $50 silver, $80 silver, because it's just not really helpful to the average investor at this point, right? We have to look at each resistance level and take those out. So 25 is the next big hurdle. 28 is sort of like the next big hurdle. And then 30 has been, call it quadruple resistance, over the last couple of years, and it's a major hurdle. But once we get through 30, it's going to be amazing in stocks like Silvercorp, and I'm sure Lon can echo that. But even over $25 silver, you're going to see a lot of silver juniors and mid tiers start to take off, because they have tremendous leverage at that price point, where on the $18 to $20 an ounce range, they're not as efficient and profitable, right? So that's kind of the macro. We think that we're going to have a good year next year. And silver is leading the way right now, which is very bullish. If you look at previous runs in the 2008 period into June of 09, when GDXJ was up around 180% during those 6.5 months or so, silver led. When you look at January 2016's, beginning of that rally into August 3rd, roughly, of 2016, silver led that rally along with silver equities. Silvercorp was one of our top 10 overall holdings, but it was one of our top 3 silver holdings at the time. So right now, Silvercorp is actually our #2 silver holding, behind Gold and Minerals, which is AUMN. And our third largest is Aftermath Silver, which is a Chilean and Peruvian developer, and that ticker is AAGFF. Happy to answer any questions about anything as we move forward. But Lon, why don't we just get started and talk a little bit about Silvercorp and the opportunities you see for the company over the next 3 to 12 months.
Yeah, well, I think it's important to kind of come back to one of the things you just touched on, which is views on silver. Like John, we're not betting on higher silver prices to make or justify an investment in Silvercorp. I mean, I think our focus here is 22 is better than 20, which is better than 18, with 54% of our net revenues coming from silver. Obviously, seeing that price move up is a positive. Seeing it move further is positive. But our focus really is to make sure that the company makes money year in and year out, good cycles and bad. And I think that evidence is our financial track record. So obviously we'll participate and we'll benefit from those higher silver prices, but it's not as though, like many of our other peer companies, that we're needing those prices to justify an investment decision. I think that's kind of the first point. Coming to that silver market side of things. I think also just from an investment standpoint, you mentioned the market is maybe not as familiar with, and I think when people think back and associate Silvercorp with what was done in terms of that growth in production through those early years, mainly through the Ying mining district, where we've gotten to now is we really have 3 assets in the company, and the silver mines, which are kind of carrying the full freight of the economic results, the revenues, cash flow, earnings and cash flow, and a lot of the valuation. That's just one of our assets. The other 2 assets we have are $200 million in cash, which we're looking to deploy prudently and along the same ideas as what we built at Ying. And then we also have an investment portfolio with companies that we have, some of them smaller, but some of them bigger investments. And the largest one is a 28% stake in New Pacific, which has been a great silver growth story in Bolivia. And now with projects 2 and 3 are adding both silver but gold to the portfolio. So again, when you look at our $500 million market cap, 200 million in cash, 100 million in these other assets, leaves really a implied value of 200 million for the mines that are delivering 6 growing to 7 million ounces of silver, plus lead and zinc byproducts, plus a growth plan, plus new discoveries in those mines. So I think we've got a lot of things going for us, and the story is not what a lot of people are familiar with from sort of having lost touch with Silvercorp over the years.
Yeah, good point. Can you talk a little bit about what we saw in the news here about your gold production jumping pretty much like 100% or so year over year, and what that means to the bottom line?
Yeah, well, that's just it's an element of diversification and obviously growth in production to add that gold element to the production profile. And we've had a modest gold credit, and from time to time, and depending from which of the mines, not all the mines have had that gold credit, but really it was on the back of a discovery made by senior management in 2020 in the mines to determine that not only do we have these very rich silver, lead, zinc veins in the footprint of the mining area, which obviously we've been mining successfully for 17 years. There's another structure that was detected in the mines, which is either a gold or a gold copper zone. And so it's from drilling that started in 2020 to delineate these zones, include them in the resource table that we published as part of our 43-101 in September. We've got a mine plan wrapped around these zones, and we're ramping up to deliver more tons from just these gold and gold copper zones. So that's kind of a new opportunity. And I think, if you look at the evolution of the mine over time, the early days were, pretty modest, bootstrapping, get to cash flow. That cash flow really built out the mines to what they are right now, which is, 7 mines at Ying feeding into 2 milling facilities. But the next chapter, looks like it's going to be adding gold, adding maybe some satellite targets. And we're, in the midst of building another mill to be able to expand our production capacity.
Okay, great. And then 7 mines with 2 mills currently, with a third being built. When is the construction expected on the third mill?
Yeah, it was originally targeted to be done the mill at the end of calendar 2023. So that's in the middle of our fiscal 2024, because we have a March year end. Might be pushed back a little bit just because of some of the delays in moving people around to sort of go spend face time with the regulators and push things through. But everything has gone pretty smoothly with respect to those key items. It's more just procedural more than anything. And then as part of this expansion, we're also building another tailings facility. And that'll be done in 2 stages, with the first stage expected to be done by the end of calendar 2024. So with that, we should exit and have a combined capacity of 5,000 tons per day, which is roughly a double of where we've been running at. And that gives us some room to grow in both our existing mining permits, by either adding new mines or upping the production rates. But also, I mentioned, there's some satellite opportunities that we think could be sources of mill feed for that expanded facility.
Okay. Can you talk a little bit about the jurisdiction that you're in? Obviously, China has been in the news a lot lately, and I'm sure some of the people here want to know your thoughts on, how things are going, with Silvercorp. I mean, in that jurisdiction, and if there's any challenges that you see moving forward.
Yeah, I think maybe I'll bring that back a bit to just speak to the fact in 2020, before everybody else in the Western world and all those other mines had issues. Of course, we had a prolonged shutdown in 2020 as a result of those measures in the early days of COVID. But since we've been back up and running, we haven't had any impact at the mine site or with respect to production. So that's been fortunate. With some of these other sort of restrictions and lockdowns, the challenges we've had have been more moving people around within the country. If you've got people in the head office in Beijing, to leave Beijing and to go visit the sites or go do other things can be a challenge to get back to Beijing. So people have been, more static, but we really haven't had any issues with respect to the supply chains, getting the things that we need, or conversely, getting our product out. And our smelter clients have been, there and have taken all our production, and we haven't had, any real challenges there. I think, what we're seeing now in the media, going back a few weeks, my sense from speaking to people, and this is, really quite unrelated to the operations, but speaking to people who were getting invitations for, people like yourself, John, to come to China and present at conferences, sort of thinking, well, if these guys are getting invited, I think something's happening, something's going to be changing through the course of 2023. So I think that's been our belief. And obviously with, what we're reading now in the media, some of those changes are happening quicker. I wouldn't say it's fully, open yet, but I think things are changing. And I wouldn't be surprised if we're not hosting, another analyst site visit, in the fall of 2023, for example, which will be nice, because the last time we were able to bring people over was the fall of 2019. And that was a positive trip. And now actually, there's been more progress, new things built, more things to show people. So I look forward to hopefully getting a chance to bring people over later in the year.
That's great. So one last question before I open it up to everyone else would be, you mentioned 28% in New Pacific. For those of you that don't follow the stock, we have been tracking that stock for over a year now. We just started a position around 208. The ticker is NEWP. And I heard the CEO present in Zurich last month. I was very impressed with the story. With a 28% position there, Lon, isn't, what are your thoughts there about the company? I know you're pretty close with what's going on at the day-to-day level, and because they're a Bolivian play, doesn't that automatically diversify the company pretty significantly?
Yeah, it does. And as I mentioned, right now, that's that's an element of our value stack, which is that indirect exposure, through owning another public company. But going forward, Silver Sand, which has been the flagship asset, which is what's generated most of the market attention, is progressing, and we see a number of key milestones coming up. One that's very key, for us and everybody in the market is the publishing of the first PEA. And so there's been a resource that was put out in 2020, but it's taken longer for a variety of reasons to get a PEA done. But it's being done. It's going to get it done here by the end of this month, probably out early in January. And this is going to be the first sort of snapshot on the economics of what a mine at Silver Sand could look like. And just to be very blunt, for other companies who might have to go to investment committees or boards to get justification to undertake a transaction, it's pretty hard at the kind of market cap that New Pacific is at to go and undertake that when you can't point to something and say, well, this is the kind of project it could be, this is what it could add to our production profile and our earnings and cash flow. So the PEA is the first view of that. And so obviously we've been awaiting that like everybody else. Look forward to seeing the information, and just like investors assessing the value of the project on the back of the PEA of the results, we'll be doing the same thing. And who knows, 2023 could be an interesting year, based on those results, our desires, other people's desires, with respect to the company and the project. I think what's also important to note, though, is that Silver Sand has been the focus for the company, but these other two projects that were added after Silver Sand was acquired, and which started to get exploration activity in 2021, and then more now in 2022, have really leaped ahead in terms of progress and are quickly catching up to Silver Sand. And so we see a lot of value creation in these projects as well. And I'd say, most of the market is unaware of what's been discovered, what's been done, and what the game plan is for those other two projects.
Thanks for that info. Yeah, I would encourage everyone listening, if you are a silver bull, and most of you are, check out New Pacific, their website, because they, the CEO is stressing just what Lon said, that, if we were looking back, 2 years ago when the stock peaked out, it was Silver Sand all day long, and now it's two other projects, and the price has dropped by 2/3 roughly. So you're getting 3 times, three different projects for 1/3 of the price that you could have 2 years ago. So it's a really undervalued story. As value managers, that's what we look for: good value. If you look at a 3-year chart, I'm just guessing, Lon, I'm not looking at a chart, but I think it's around $1.68 was the low, and in 2020, so it just above $2 here. It's a very attractively priced silver stock.
Yeah, and I'd say people who think they know the story, when we've been meeting with them to discuss the results over 2022, are really quite taken aback at what's been delivered from a technical standpoint. So I think it's just the market needs to play some catch up here. And again, with all these other milestones, I think 2023 will be an interesting year for us and for New Pacific.
That's great. Let me see. Let's open it up for questions. If you have a question, just go ahead and put it into the chat, and then I can sort through those and direct it to myself or to Lon. If you guys want to just start typing some basics into the chat, I'd appreciate it. Thank you.
Maybe in the meantime, John, we just talk about, because I know you've mentioned it before, and highlighted the fact that from a growth standpoint, what is Silvercorp thinking of doing with that, cash war chest of
Sure.
200 million? We've talked about New Pacific, and there could be some catalysts there in 2023. But more generally, as a group, we are aggressively looking at projects around the world. Some of them we find ourselves, other ones are brought to us by advisors, private equity groups, investment banks. And we sign, I'd say typically maybe 30 or so CAs a year. So that means a minimum of 2.5 fairly extensive reviews of projects, from a data room a month. So it's a pretty busy flow. I'd say we're a very discerning buyer. So there's lots of things that are being floated out there. I mean, the reality is there's lots of companies out there that truly aren't for sale at current prices. They will say they are, but they'd rather just see if they can raise the money to keep their current business plan going. But there's lots that we look at that we discard out of those reviews. There might be one or two projects that fit the bill. Then the big question is, can we get a deal done on terms that we like it, so that we can move forward and show the market that we've added a new asset in a new jurisdiction.
Yep, thanks for that. I mean, you get that question quite a bit, I'm sure, about the cash balance. And I'll point out again, no debt. That's huge. I mean, having no debt in this market that has killed companies in the 08-09 crisis and in late 2015 into 16. You want to be able to survive, and we've seen that happen this year, right? With some silver and gold companies just not make it, and most of the time it's because they carry that debt load. We have one question to start off with, and it says, where do you see the price of silver and Silvercorp going next year? I'll take the silver piece, and why don't you take the valuation piece, Lon? Maybe talk a little bit about the free cash flow and such. The silver price, Ted, I think you joined a little late. I basically said that we broke through 22 major resistance, and then 25 is the next, kind of round number hurdle. And then 28 would be kind of bigger resistance, with 30 being super resistance. So I look at everything methodically like that, because I never like to get ahead of myself when it comes to prices of commodities. And I think those are major hurdles that are on everyone's radar. I do think we have a shot at 28 next year. I'm not so sure about 30. It just depends, right? I mean, you've got a lot of geopolitical risk out there with what's happening in Russia, Ukraine. There's a lot happening with interest rates globally, obviously, and today's ISM number is now another notch in the belt for a 50 basis points rate hike December 14th, in my view, and the markets reflected that with sell-off. So it just depends. The Fed being data dependent, you have to kind of look at every one of these weeks, whether it's non-farm payroll, CPI, GDP, whatever, and assess going along, right? So it's a fluid situation. I wish I could give you a better answer, but that's how I see it, and that's where I think our process and our value proposition to clients is that we're updating clients today 6 minutes after the ISM release. And I said, buckle up, it's going to be probably a tough day for equities. And getting that information helps my clients, because if they're thinking about going long something, maybe they'll hold back, a little bit and get a better entry point. The other question from Ted was, is Silvercorp going to acquire any more projects since they have so much cash? And I think you kind of just addressed that, Lon, with the fact that you're investigating a lot of different companies. Can you clarify for Ted and for others what the CA means in terms of that acronym, please?
Yeah, confidentiality agreement. So there's some things you can do in terms of reviews of companies based on public data. But then if there's a real desire to investigate, if there's a real opportunity, we need to see data that isn't shared widely with the market and investors. So we'll enter into a confidentiality agreement, which is intended really to protect the disclosure more than anything else. Just that we don't take the information and broadcast it around the world. And so it's with those agreements that we then get access to more data that we need from a technical standpoint to evaluate the targets. So
okay.
What I might do is I might jump back and just address the second part of that other question. Where do we see things going next year? Yeah, John, you speak to what are attractive silver prices. None of our planning is dependent on silver hitting $28. Obviously, with 6 growing to 7 million ounces, we're going to participate, in that silver price move. But nothing that we're really doing is dependent on that. If we did see $28 silver, yeah, we might go and make some adjustments to the scheduling and where and what we're mining. But again, that's all a good news, a nice problem to have, so to speak. So.
Yep. We have another question about the September GDX and J rebalance and how that may have affected Silvercorp, and why did we see that volatility, Lon?
Yeah, well, obviously our stock came under pressure through the summer and going into September. I look at the market cap now at just over 500. US, and I think at one point in September it was 373 on an intraday low.
Right.
So if you look at what the market was paying for our mines after you take the cash and those other investments out, that was a pretty crazy valuation. But you know, from a trading standpoint, you know, we dipped below that that threshold, which I believe is 500 million for inclusion. Correct me if I'm wrong, John, but I think it is.
I think it may be 450. I'm not
yeah,
sure.
Yeah, actually, yeah. Maybe it's the 450 number. So we're well above that. Unfortunately, the mechanism means you know, you slip below that, and you know, you get dropped out, which causes everybody to rebalance. But now we're at 500. You know, are we going to be facing the opposite situation now with above 500 or above 450, and you know, get added back in? You know, it's I'll leave that to those ETF guys to manage. You know, we just have a company to run, you know, based on the things that we can control.
Yeah, good answer, and that's important for everyone to note. One of the things I teach everyone is to mark your calendars for that third Friday on quarter end. So September 16th is the day I believe we're talking about here. December 16th, and looking at my calendar, is the next time you're going to see that rebalance, everyone, in GDX and GDXJ. So, you know, what Feneck does as the manager of those two ETFs is they don't buy, this is my opinion, okay, but I don't think they buy everything on that day. They can't, because our sector is very illiquid, right? So if they're going to include something like Silvercorp and GDX, for example, they need to buy going up to it. And that's why you saw a decline leading up to September 16th, I think, in Silvercorp, is that they were getting out of it slowly, and then they got out of a bunch of it, you know, on the rebound. But that's a buying opportunity. And if you can kind of look at those kind of things more closely, I saw the same thing happen with New Gold a few years ago, NGD, and it was amazing. They were getting right on the cusp, right? They were getting kicked out. Then the next quarter they were back in, then they were kicked out, they were back in. It was unbelievable trading opportunity. In the case of Silvercorp, I mean, I don't trade it. I'm just buying those dips, right? So like at 232 a share, we bought another few thousand shares there because I thought, like, hey, this is just Feneck rebalancing. This has no material information on the stock whatsoever that's affecting the price. It's simply they are getting out because of a metric, right? Those are always good opportunities, in my opinion, long term. We have another question. What about exploration and resource development?
Yeah, well, there's a couple ways of addressing that question. I mean, one is with our existing assets. So exploration, yeah, it's ongoing and extensive. And Ying alone doesn't mean they're operating at all times, but we've had 80 rigs spread across the 7 mines within the Ying mining district. You know, we did in 2020 and 2021, 630,000 meters of drilling, and that's on that back of that discovery that I mentioned earlier, in terms of these new gold zones, but then expanded out looking at the traditional mineralization. So exploration and resource development is a big thing for us in terms of our existing mines. It always has been. That's why we've always had a long life of mine ahead of us, even being an underground sort of narrow vein precious metals company. We've typically had a longer mine life than many of our peers. It's going to continue that way. And then I would say, you know, outside of that, you know, greenfields area, the exploration and resource development really is done indirectly through some of these other investments. And again, you know, coming back to New Pacific, that opportunity was, you know, seeded when they were presented with what was largely a grassroots silver opportunity in Bolivia. And a grassroots exploration opportunity in another jurisdiction probably isn't a fit for Silvercorp. We'd like to buy something that's got some resources, some things we can sink our teeth into and think about how to build a mine and start delivering cash flow. But if there's a promising exploration or development opportunity that we can participate in indirectly, like we did with New Pacific, you know, that's a way of getting exposure and also having some oversight and some input in terms of, you know, how to do things well and how to make that discovery and grow a resource.
Right. Okay. Now, also, I mean, piggybacking on that, couldn't you do some type of joint venture with a junior, you know, that already has gone down that road a little bit
Yeah.
and done, yeah. So it's not all about what you have. It's, you know, you're seeing a lot of people come to you with opportunities, and some of these opportunities are pretty meaningful.
Yeah, and I'd say we're in this stage of the market with the volatility we've had, but reasonably, it's still been a fairly robust market up until now. The volatility, hurts share prices, but a lot of the companies have had enough cash to continue. We've hit a point here where I'd say people are approaching us to see if we're interested in the strategic investment, through their stock. We haven't seen that level of call it desperation or capitulation yet, where people are prepared to let us get in at the asset level, which is then once you're in, or to actually sell the project or the company as a whole at these levels. So, we'll see what happens here. Either the market can, turns around and gets strong again, and the market for raising money is there for these companies, in which case, they'll continue on to raise money and try to move their assets ahead and de-risk them. But if it stays tough for them to raise money, then we might see more people willing to let go of the asset in a bigger transaction.
Yep, absolutely. And do you think that we've kind of turned the corner a little bit here with regards to the sentiment? I mean, at least we're not seeing the capital markets lock up, obviously, but it has been a pretty challenging, period of time, say from July until, October for juniors to raise money.
Yeah, it has been, and I'd say the downward movement in everybody's share price just augmented a typical, the typical tax loss selling season that we've seen in the markets, which I think carried into November. I think for the most part, people are prepared to sit on the sidelines and not make any decisions that they think will be foolish here between now and year end. And hopefully, yeah, we've gotten some of that bad news behind us. And then, as you point out, with a bit of an uptick in the silver price and maybe some more commodity market enthusiasm in January, we'll see the markets turn a bit robust. Typically, again, it always shows more in the liquid, larger cap seniors. And then the longer that momentum and enthusiasm stays, you see the appetite, trickle down to the smaller caps, where the share prices move, and then potentially, if there's more money behind that, you see the financings getting done again.
Okay.
But we are seeing there are some financings that have been done. You mentioned Aftermath Silver just did a financing, which was, I think, upsized 2 or 3 times. Abra Silver did a financing. I think it was well received. Visla did one a couple weeks ago. So for select names, and these are dominantly silver names, for select names, there is some capital being raised for these.
Yeah, absolutely. I mean, the October 3rd saw silver up 9% in one day, right? So like anyone who was financing through that or just after that got a little more love than say from July, August, and September, right? So it was it woke some people up pretty quickly. In fact, there was a piece on Kitco that I sent to all my clients that TD Securities was really short silver up until Friday. It's amazing how some of these larger institutions at these prices are shorting silver, shorting gold. It's like, to me, it's absolutely ridiculous. I think there's so many opportunities to short out there. We're 13% short right now, but we are short things like travel and leisure, technology, retail, things that I think have a lot more hair on them than our sector at these price points. So with that, let me just mention, we have a website called fenneckconsulting.com. If you're interested, there's some information there about what we do. We have, here's my personal email address if you guys haven't had a chance to answer all your questions. It's JOHN and then a dot and then Feneck, FENECK @yahoo.com. And that'll go right to me, and I'll try to respond within 24 to 48 hours. I think when we look at how much pain we've probably all felt on this webinar from August of 2020 to today, it's been 27 months, right? I mean, this is a really long downturn, because if you look back to the 2001, kind of recession, there's only been there's never been a time that's gone over really like 12 months of any significance. Usually corrections are 8 months in length, and this one is a triple. So that doesn't mean you get triple upside. That simply means that, you know, this one is pretty spring loaded. And if you look at how GDX and GDXJ, just as proxies for our sector, have performed, you're starting to see some real action in the silver and gold equity space, which is very encouraging. So if any of you guys have any questions that go beyond this, I'm happy to try to do what I can to answer them and get any questions to Lon and his team. And Lon, really appreciate having you on today.
Thanks, John. Appreciate it. Always a pleasure, and look forward to the next one.
Thank you. Thanks, everyone.